Greetings, my friends. It is I, King Compound, your trusted guide through the kingdom of finance, where patience rules and time is the most powerful ally of all. Before we begin, remember this royal decree. The Daily Compound is here to share wisdom and understanding, not personal financial advice. Always do your own research or speak with a licensed advisor before making financial decisions. Now, gather close, because today's lesson is one of the oldest and truest in all of investing. Time in the market beats timing the market. Ah, yes, that phrase has echoed through the halls of wisdom for generations, yet few truly live by it. You see, patience isn't glamorous. It doesn't sparkle like gold or dazzle like sudden fortune. But patience, my friends, is the quiet architect of wealth. Most people want to outsmart the market. They dream of buying at the bottom, selling at the top, and dancing away richer than their neighbors. But in chasing perfection, they miss the real secret. Staying invested long enough for compounding to work its magic. When you try to time the market, you're betting on emotion, on fear, greed, and luck. But when you focus on time in the market, you're betting on discipline, on consistency, calm, and the unstoppable power of time. That's where one of my favorite strategies comes in: dollar cost averaging. It's as simple as it is powerful. You invest the same amount of gold week after week, month after month, whether the markets are soaring or storming. When prices rise, your coin buys fewer shares. When prices fall, it buys more. And over time, the waves smooth out, the storms pass. You've taken emotion out of the equation and replaced it with consistency. Dollar cost averaging aligns perfectly with the royal law of compounding. You're patient, you're steady, you're disciplined. You stop asking when to invest and start focusing on how long to stay invested. Because history, my good people, shows us this. Missing just a few of the market's best days can change your results forever. And no one, not even the cleverest wizards of Wall Street, can predict when those days will come. That's why consistency wins. You stay through the ups and the downs, and the market rewards your loyalty with growth that compounds quietly over time. Think of it like planting a tree. If you keep digging it up and moving it, it never takes root. But if you plant it, water it, and leave it be, the roots grow deep. Time does the rest. That, my friends, is the essence of investing through consistency. You plant, you nurture, and you let compounding do what it's done for centuries. Grow quietly in the background. Dollar cost averaging also trains your emotions. It teaches calm when others panic. When the market dips and fear spreads, you don't see disaster. You see opportunity, because your plan is already in motion. It's not about ignoring the noise, it's about being immune to it. And remember this: time doesn't just compound your money, it compounds your mindset. The longer you stay consistent, the calmer you become. You stop reacting and start thinking. You stop chasing quick wins and start playing the long game. That's what separates the speculator from the investor and the investor from the true owner. So, if you take one thing from today's lesson, let it be this: you don't have to be brilliant to build wealth. You just have to stay in the game long enough for time to make you look brilliant. This is the Daily Compound, brought to you by your humble teacher, King Compound. 5 minutes a day to make your money and your mind grow together.